All right, so I've been talking to myself the whole time. Now you can hear me. Hey, are we good? We better? There we go. We know the chat box works. That's perfect. All right, perfect. Now you can hear me. All right, 2 o'clock, interest rate decision. Right, so prior to 2 o'clock, my rules for Fed day, don't trade. It's going to be a choppy day. Generally goes up and down, goes sideways until that interest rate decision is released. So no day trading from me this morning. Now get set and you can get ready. The Fed decision, the Fed day is the largest moving market event. So on that interest rate announcement, if you're a qualified and educated investor here, phenomenal opportunities come into play on that news because massive movement, but you've got to be understanding of exactly how to enter those markets, looking for breakouts. You got to understand how to manage your risk correctly because large movements very quickly can be large slippage, even with stop losses in play. So slippage is the difference between what your stop loss is and your point of execution. And that the price difference between the two can be very large in fast moving markets. And generally a Fed announcement produces a very fast moving market in a very short period of time. Great opportunities there, but you gotta know what you're doing. So this is the big one. So no real day trading for me today. So here we go. Let's come back. We'll go back to the S&P 500. Right? A little technical glitch there. Let's come back. We'll look at the 60-minute time frame again, so you guys can hear what I was talking about. On the 60-minute time frame, into overhead supply, right? Moving back down out of overhead supply. Right now, we are holding the demand level right here. Right? A little demand level here, and it's a level on top of level. Right? So we're holding that demand level. Nice long tail here, showing buying pressure. Right? We move back up halfway up the candle there. I would have liked to see it close a little higher to show us the real strength in the markets, but a decent close on that candle right there. So now what we want to see is in between the 13 and 20 period moving averages. This is a very common area of accumulation on any time frame. So if we can continue to push higher, yes, there's supply above us, right? So there's a lot of work to do to go north, and this is the supply level we're talking about above us. So it's going to be a lot of work to move to the upward direction. We have strength in the market at this point in time. A lot of stocks gapped up this morning. They have filled those gaps. There's a lot of opportunities based on your 10 o'clock, your 10 a.m. reversal. So lots of opportunities there. On the Russell, into supply, held a little demand level right here. So that's showing strength. Nice long tail in that candle, showing massive buying pressure. We need to get through this supply area. So if we can get a nice big strong green candle pushing to the upside, then we will be rocking. We will be rocking. Okay, you can tell I'm new to this. A lot of technical difficulties. You guys are rocking. I appreciate all your questions and responses there. Help me out. Phenomenal. So on the Russell, you can hear me. Now you couldn't see me. Now we got both. Sideways, breaking out to the upside. We need a big, strong green candle. We need to break through the supply. Right? If we do, and we can close somewhere near the top of that green candle, that's going to show tremendous strength. This becomes a new demand. Right? On tremendous strength, we can then look for a retracement back down into this area to get involved for then a long trade. Now back in here, you're going to have another supply area, not a very good and solid, strong supply area in here, but there's going to be another supply area. Now, when you look at traditional education, you have resistance, support, right? Resistance. So it's a very strong area of support resistance for the old school traders. And some of those big old school traders still exist in the institution. So these are the areas you've got to look for. So if we can get long off this and you want to take the opportunity before the Fed announcements, this is an area where target one's going to come into play, and you've really got to lock in profit there. Right now, Russell's showing us tremendous strength. If that strength can continue, get above here, close somewhere near the high, that'd be a phenomenal opportunity for them to look for a retracement and come back into this price area, So Russell's looking good, looking strong. So we got some money flowing into the Russell. That's promising as more of a broader market inflow of capital. And we kind of see the need to see that a broader market inflow of capital if this market's going to remain strong. If we kind of get a broader inflow of capital across the entire markets, and it's just going to be your FANG stocks and tech stocks, it's going to be difficult for this market to stay up longer term. On the NASDAQ, right? Up into the upper level of supply, right? So we've just hit that supply level in the overnight in the Globex transactions, coming down and trading down into the little area of demand right here, holding that demand currently. So this supply level that we had drawn in here, it is now gone and taken out. Right? The upper level of supply still exists and remains, but let's take a look at the depth of movement into the supply area. A lot of the supply is gone. So if the market can hold and maintain the strength, right? I want to get back above that 50-period moving average, the red moving average right in here. If we can maintain that strength right there and close above here, we're going to have a chance of moving to the upward direction, and there won't be a lot of overhead supply to stop it. Right? But we've got to maintain the current strength. So one promising thing is a nice long tail. We closed above the halfway point of the candle. That's just a sign of strength. We have retraced some of that. So if this candle here in the next 30-minute closes where it is, we can then look for an entry above this candle's high, above the 50-period moving average, and look to go long and not have too much overhead resistance or supply. Now you've got to have the areas back in here, but really the next area you're going to be looking at is up around 11,686, right, for where your resistance area is going to come into play. So opportunity upside. Now, what about the downside? Downside, we've got to break this low, and we came very close to that right there. If we break that low, right, then you have permission to be a short seller, right? So now I'm not going to just enter short on the break of that low. I want to see it close below the low, retrace back up into an area of supply. And where that develops, we don't know as of just yet. There is this area right here, and this is a proven area of supply currently. How do we know that's proven? Well, on this candle here, traded all the way down, pushed all the way back up into that area of supply and closed lower. So this is a proven area of supply right here. So if we were to close below here, retrace back in 11,474 on the NASDAQ, right? December contract, we've gone through a rollover, and that's an area we can go look to go short on the downward direction. So if the NASDAQ was to do this, then we're gonna have to look at all the big tech stocks for looking for short opportunities, because it's what's gonna be dragging the NASDAQ down as a whole, is your big tech, big FANG, etc. So opportunity there on the short side, if we cannot maintain this strength, right? I'm not too concerned about this as being supply. Taking an entry right here, if we can maintain the strength, because we should be able to push right through this area here and continue to climb. On the S&P, right, for the SPXL, let me just flip over to that chart if I can. Let's see. So on the SPXL, so this is a leveraged S&P exchange traded fund right here. We can see base of yesterday, gap fill retracement, gap up, hold, right after a gap fill here this morning. So looking for a break above this area here is we can then look to trade into this supply area here. So there's a little day trading opportunity there if you're willing to trade, and it's not against your rules of day trading on a Fed day announcement. For myself, I will not be taking these trades. My rules are do not trade on these days until the announcement is out. So I may miss a lot of opportunities, but that's my rules, and I adhere to my rules because they've been proven to help me and work for me for many, many years, 18 years in this business. So there's an opportunity there if it's got that strength and can push higher. Right now, we've got to be following and looking at the NASDAQ for that strength. And the reason being is your big tech is leading this market. Big tech is leading this market. So right now we're maintaining strength. We're not too far away from this candle close, right? And then look for the push north if that can take place. So if you guys have got any stocks you want to actually look at and have reviewed, put them in the chat box there, and we'll get to them. And we can then, if you're looking for day trades, or you're looking for swing trades, put your time frames of what you're looking for. So just put your ticker symbol and time frame of what we're looking for, and you can do a top-down analysis on those going through. Let's go over to a couple of the stocks that we put out there in our stock report from the trading room and cover some of those. So let me just find that screen for you. And we are gonna be, I've got about 22 screens open here, so you just have to bear with me a little bit. Okay. Nope. Here we go. Okay, so one of the stocks we put out there was the exchange traded fund on the S&P 500. You guys should now have that up on your screens. And there's going to be a little bit of a delay here. So this is the SPY. This is the SPY. Let's come out. We're going to be looking at currently on the weekly time frame. Let's do top-down analysis. Weekly time frame. We can still see we're inside last week. So from a weekly standpoint, we're not showing strength as of yet because we have not got above last week's high. We're very, very close to that price area right there. We're getting very close, and this would be another interesting transaction because you'd be looking right around on the SPXL on that breakout would be the weekly chart breaking above last week's high. And that then can then push us north. So on this trade here from 2 weeks ago, this was our entry point. Okay, we've hit target 1 and we're heading for target 2. So this is looking at this from a longer term swing trade perspective, right? So let's look at it. We'll break this down. Let's come down to a daily time frame. On the daily chart, okay, we've got the double bottom breaking above this price point here, which would be also the 20 period moving average, would be the confirmation of your W formation for winter. Right? So that's an opportunity to get long on the breakout. So what would be great to see here on a 60-minute basis, and it's very possible we could get this today with the Fed announcement, is a base right here. And if we can get that base, and then we can look for the breakout to the upside, we're gonna have target 2 coming in at 346. Just above us, and it shouldn't be too difficult to reach that price point as long as the Fed announcement agrees with consumer sentiment, so consumers' point of view and opinion on the markets. Break this down a little further, coming down into the 4-hour time frame. On the 4-hour chart, we have developed the high, we are developing that base, and we can look for the breakout. So you could trade the SPY here, or you could take this trade on the SPXL and get the leverage factor coming through on the SPXL, or you can leverage it and go and trade call options. You can take the 50 call option, in the money call option on SPXL, and leverage this transaction, have less risk on the trade with a higher rate of return. So you can trade the SPY, you can trade the S&P futures, you can trade SPXL, or you can trade call options on SPXL or call options on the SPY if you choose as well. And being more of a shorter term transaction here, playing the breakout of this transaction in the 4-hour time, you could even come down to the weekly option contracts, which would be very inexpensive, but very responsive to movement. Right? So especially if you go deep in the money with a higher delta. So lots of opportunity there. Right, coming through. That's the SPY. Let's go over. Yeah, we got a request here for LRCX. LRCX coming out of the trading room here. So what we're currently doing is we're streaming live out of the Trader Boys trading room here. Everybody should be able to see the questions coming through, whether you're on YouTube or Periscope or Facebook. The only one that's not going to be coming in is Instagram. Instagram won't be coming in, but the live stream is on Instagram. So on LRCX, on the weekly basis, we went a little lower than the setup on the weekly demand level here that I had put in. There was another level here, not a great one on the weekly basis, but let's break this down. Let's look at this from a daily standpoint, and let's see the action we got going on. So on the daily standpoint, we had the gap fill. And basically what you're looking at here is a area of resistance that became support. Right? Now we had to close below the 200 period moving average, right? Only to gap up back right above the 200 period moving average. So on the 200 here, we can see back in here was used as a support. Back here is used as a support. In here is an area of resistance. So that 200 period moving average is relevant to this particular stock based on institutional algorithms and factors come into play. Now we've got the 1 day up, gap up, trade down for the gap fill, and now we're sitting in this area here. So LRCX from a daily standpoint is going to be very relative to what the S&P does here and the NASDAQ and so on. If we can get the breakout, we'll get a nice breakout on this transaction here, and then you've got a lot of room that we can run. Basically what you'll be looking at for a target standpoint, if we can run. Now we haven't got an entry point just yet, but from a target standpoint, you'd be looking right at this area here, right under these previous pivot lows, and that also coincides with the closing of this market here. Now, closing prices of candles are critical. They're very, very important. Institutions close the market at certain price points. And you'll see this happen a lot of times. And when you draw trend lines correctly, you draw them on the closing areas of a candle. And you'll see this, you've seen in many of my videos and so forth in education, where a trend line drawn from months ago will be very precise today. And it's based on closing prices. You're picking up on the algorithms of institutions there. Let's break this down a little further. Let's see if we can pick up an entry point on the 4-hour time frame. Right, 4-hour time frame, very similar to the S&P 500. We're up, looking at a base. And what's great about this one, if we can get the breakout of this base to the upside, there's not a lot to stop it until we hit target number 1 at 33,333. Right, so a lot of upside potential. Stop loss would go just below the base right here, right, just under this red candle's low. Right, so you can look at this for a high base and look for the breakout. I would be waiting on that until we get the news. Right? If it breakouts before, I'm out of the trade. I'm going to let it go, and we'll look for another opportunity. Okay? Trading is all about stacking of probability. Stacking probability minimizes risk. Right? Your entry point is the number one key to success in investing. Your entry point. Your entry point generates the probability for success. Your entry point decreases your risk exposure. So entries are critical, and entries must be very precise, right? Rule driven, and follow those rules. So right now, high, base, look for the breakout. Now, if this was to break down, let's get this out of the way. If this was to break to the downside, right, and the markets come into a level of demand, meaning the broader markets, right, I'd be looking for the gap fill, okay, coming back down into this area here. I want to see this area here hold to make sure there's institution accumulation here. And if we can get the 292 area right there to hold, then we know the institution is going to be present, right? Wait for strength to come to the market and then enter on strength. Right now, once we get the entry on strength, breaking above this here, if this was to become a high and we get the retracement, we then add to the position to trade up to 333. Right? So if this was to break down, still a great opportunity involved in this market here. Right? As long as the markets stay bullish and stay strong, right, and don't break below weekly levels. Right? So look for the high base breakout, or look for the retracement back down to gap fill, and then look for the opportunity. On the gap fill here, very low risk entry, that massive profit potential to the upside. Massive profit potential. So very, very good risk reward ratio on that one though. Right? Let's go over, let's look at some of the big ones here. AMD, big tech stock, right? Coming off the stock report we put out there Sunday night. So what do we got? We got the entry, right? Beautiful entry here. So this is looking at the weekly time frame. Not much to report here. That's on the weekly basis. Let's go down to the daily chart. On the daily chart, here was our demand level right here. Right? Demand level here, proven demand here and here, as well as right here. Market came in 76.20, take the entry. Now this is giving you a couple of, if you didn't get the entry back here on the 11th, which we would not have because I put this out there on Sunday, right? You had the opportunity either on Monday or even yesterday to get involved in this transaction. And yesterday we came up, we hit target number 1. So you would have taken profit, you would have money in the bank, and I would have my stop loss right now just below this candle's low, which means we're now in a trade that unless it gaps to the downside, we cannot lose on. So we're in a trade where it's going to make money. If the markets can break to the upside, then this should come up, hit target 2 pretty easily here. And then we can look for, it will retrace off the moving average. You can see the moving averages being used back in here. They will be a form of resistance. Right? So we will get a retracement here before we can get to target 3. So having the right expectations, and this is what I teach my students, is draw on the charts what you expect it to do. And this is a phenomenal education and self-learning tool, because once you start seeing the charts constantly doing what you expect them to do, now you know that you've got a proven understanding of how supply and demand works in the financial markets. Right? So understanding these areas of what institutions are using is we're now going to be using their money, their analysis, and they're always going to be better than you and I are to now make us money and manage our risk. So that's AMD. Let's jump down the 4-hour time frame. It's not going to be able to see too much more on that. Too much more information on that. So hit target 1, looking at the base. Okay, I wouldn't be looking for a breakout just yet or anything else. If it does that come back down to this demand level here, you could re-enter. I would be looking for it to come all the way down to this low at 75.05 for an entry. I want to take a lower entry if it does revisit this zone. Stop loss just below 74, so we get a low risk, right? But proven area of demand with strength. And then we can look back to 79.94 for target 1 and so on going forward. Right, put your crusts out there if you got them. Right, so let's jump over. NVDA, another big stock, powerhouse, massive institution accumulation, as you can see right here on the 4-hour time frame. I mean, look at this. The stock's gone from 182 to 589 in the matter of months. Right? Markets have been very strong in technology, obviously, but this stock is outperforming, which means it's just massive, massive accumulation of institutions coming into play here. Let's just drop this back to time frame. Let's come back to the daily time frame. Let's take a look. What do we got? We are gapping and dropping all over the place. Right. So from an institution standpoint, what does that tell you? Right, good news coming to the market, good sentiment coming to the market. Institutions are distributing right now. Gap up, sell off, gap up, sell off. So they are taking profits out of this stock and out of this market. Now we have got it back above the 20 and 30 period, 20 and 13 period moving average right here. So that's an indication of strength. Now, if this candle closes this way, right, and closes and holds that 20 period moving average, we can then look for an entry right above this candle here, going up to 546. So there's an opportunity to enter this market, again, as long as the S&P and NASDAQ remain strong and don't break below the levels we posted. Right? You get a great entry point here. So now if you got into the entry back in here that we posted 2 weeks ago, right, you hit target one here, you remained in the trade because you never got back below this candle's low. Right? You can now add to the position, breaking above this candle's low here, going up to target number 2. So whatever the profit point you took on here, you could re-add that back in the market based on strength in this market and look for this to come higher. Now that's off the daily time frame. Let's see the action on the 4 hour. The 4 hour really doesn't give us any different information here. So breaking above this candle's high, boom, up to target 2, right? Or if you're looking at a new entry here, this would be target number 1 for you. Right, so that's NVDA. Let's a couple of favorites. Apple. We're looking to look at the Robin Hood traders out there. Apple, that's one of the favorites, and then we'll look at Tesla, another one of the big favorites. Apple entry down here. This is the trade we put out there on last week. Right, 110.28, beautiful entry. Got the low of the markets. We hit target 1. We have had a retracement. Apple is the exact same position here on the 4 hour time frame. Nice retracement coming into play. This candle holds. You can look for an entry above this candle's high and trade up to 120.06 for target number 2. If you're in this trade, you've taken some profit here and you have the retracement, you can rebuild your position back to your full size position. Right? Go above this candle, look for the trade up. Your stop loss will then become under this candle's low. So you're going to have basically a no risk trade. You're going to have profit in the transaction. And if this was the only way you can lose in the trade at this point in time is if it gaps down. And that could happen. That could happen on a Fed announcement news intraday on something like Apple. Okay, so big volume trade on this. Massive number of traders watching this and monitoring the stock here. Right, now, another question is, where could I go short? What if Apple is to move to the upside here? Where could I go short? Well, there's a reason why this is target number 2. And the reason why is you've got this minor pivot low here, move back up, trade down, which also created a little area of supply in here. So if Apple's to get up into 120.06, right, and the S&P and the NASDAQ do not push through the supply levels and shows that strength, then 121 is an area that you can actually look short on this and then add to position break below this low here. Right? Now, other than that, until we break this demand level, I have zero interest in shorting the stock. Right? This is a proven area of demand. Massive buyers sitting at 110.28 area here. Now, if we do break this area, look for the short setup, right? Break through, retrace back into supply. Then we've got a massive move down to 96.43. 96.43 on the weekly time frame of Apple is where I really would love to see Apple fall to. This area here on the weekly time frame is absolutely freaking awesome and phenomenal from a demand zone. Market falls here, you're going to be right in the area of that 20-week moving average, which is going to be very strong and powerful in this particular stock. So 96.43 area, this would be awesome, absolutely awesome for an opportunity to get into a long-term trade on Apple if the markets can maintain their strength into the future here. Let's take a look at Tesla. Tesla was a trade we posted a couple weeks ago, 2 weeks ago in the stock report. It has done absolutely phenomenal. So this area here is the area we're looking for. This is not coming off the weekly time frame, but off the daily chart was the demand level that we're looking at. So here's your demand level. There's actually 2 levels of demand that you'll see in the 4 hour time frame. The ultimate entry was right here at the 327 mark. 327 is the ultimate entry. You can see that we did not achieve the ultimate entry. Right? We did get the gap down into 334 though. coming in, we closed right at that 50 period moving average, 50-day moving average on the daily time frame, right? And then we got the gap up, trade up. And now this here is very similar to what we just looked at on both AMD and Apple, that little retracement here. And then you look for the solid move to the upside. So this was the next opportunity coming through here, is trading, taking the trade above this candle's high, right? And then getting that next move up, right? So phenomenal little opportunity, right? It's already possible. We can't take any action on it now, but this is just gives you kind of the indication of what we're looking for to take place on both AMD and Apple is retracement, enter above this candle's high, and then look for that next solid move to the upside. Now coming up into this area up in here, okay, so just below this candle's low is where you're gonna be looking for an area to take some profit, also an area to look for a retracement. And what we'd be looking for is, we kind of look at the data that the institutions provide us here, is you've got an area of resistance, right, that we broke below, became resistance again, okay, the market closed that right here, and then we get the gap. So we'd be looking for a retracement back down into the 419.65, right, into the 20 and 13 period moving averages here. Then you could look for the next entry to go long to wherever this thing is going to go, right? Still, again, based on market strength. Now, if right, markets can't improve strength and they can't get to the current supply areas, then you can look for a short, right? You can look for a short coming right through off this area here on Tesla, right? Now, wide zone, so manage your risk accordingly, but this is up to the daily time frame. We can minimize this on the 4 hour, but you can look at going short in this area, right? As long as the broader markets indicate you to do so, right? So it's not about what you think, it's not about what you want to do, it's about what the market tells you to do. And this is probably one of the most difficult things from a psychological standpoint for traders to understand, is they think something's going to happen. They think the market's going to move. They think this is a great stock, right? Don't think. You don't have permission, unless you got $100 million plus portfolio, you don't have permission to think and have an opinion in the market. You must do what the markets tell you to do. You've got to do what the charts tell you to do. Right? Are you always going to be right? Absolutely not. Right? So for new traders and seasoned traders, you are absolutely guaranteed losses. You are 100% guaranteed to have losses in the market. What your skill as an educated trader needs to be is, how do I minimize those losses? Right? How do I minimize the losses? And then secondly, and very, very importantly, is how do I maximize profits? Right? So these are all the rules that you've got to build and develop to be efficient and effective in the markets. Once you then execute rules, we manage emotions. Right? And emotions are the greatest killer of investors. Like traders and investors, emotions are what takes their money. And this is what institutions do and does to traders that has a heavy, heavy effect on them. All right, so last request, any other stocks you guys want to look at before we wrap this up and shut down this live stream? Type them in the chat box if you got them. Let's take a look. Really strong company out there that I want you guys to keep on your watch list that's being heavily, heavily, heavily accumulated right now by institutions. This is a bonus play for you, is PFSI. Okay, this stock is still relatively cheap, right? Massive mover here. So let's come out, let's do a top-down analysis. Let's come back to the weekly time frame. This thing has gone from $12.50. We've just hit a new all-time high of $60.50 in just months, right? So you can see back here, the angle in which the stock was moving up was very, very minimal, right? We had the sell-off with the broad markets. Now this thing is absolutely exploding. This is institutional accumulation. It's only relatively new. This stock here has the potential to go for a long, 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 long way up. So this here is a stock you want to put into your investment portfolio, retirement accounts, whether that's IRAs, TFSAs, etc. So massive investment coming in. So big move up. So a lot of people listen and go, well, it's at all-time highs. It's too high in price. It can't go higher. Well, I mean, if you looked at, Apple at $80 several years ago and said it can't go higher, and they just kept going higher and higher. Tesla, another example. Oh yeah, they can go higher. They can go a lot higher. So on the daily time frame, we are currently high base breakout. Okay, we're sitting in this area right here. Now these stocks here, what you'll see a lot of time is they go up, little retracement, up, sideways, breakout, up, sideways, breakout, sideways, breakout, sideways, breakout, sideways, breakout. they have very, very little retracement. These are breakout transactions, right? So a lot of time we don't have the option of waiting for retracements, because a lot of times these type of stocks don't really retrace up, sideways, breakout. So these are your high base breakouts, and these are breakout transactions. So this is one of the ones we put out there 2 weeks ago in our stock report, and you can see what the entry and stop was. There was your entry point, right? We just touched, never came back to look at it, hit target 1, target 2, and then the rest is a runner. And we're just going to manage underneath pivots, right? So stop loss would be currently sitting here underneath the pivot. If this was to break out and continue to the upside, then the stop loss can come up under here as a longer term transaction. Now, what we want to do with a stock like this is continue to add to the investment. We want to build this investment on strength, right? So high, base, breakout, base. What are we looking for next? Breakout. Right? So if we can get a little candle here and we trade above this tomorrow, above today's high tomorrow, then we're going to be looking for the breakout. I'm not concerned about this high price right here. Not concerned one little bit on a stock like this on a longer term play. Right? So let's break this down. Leave the 4-hour time frame. 4-hour time frame shows you the high, the base, and the breakouts a little better. We're setting this up again, high base. We're looking for that breakout once again. I'm not concerned about this candle here. Okay, so wherever that base is going to form, wherever it may lie, then we can look for that opportunity. Right, so we do have that base developed based on the opening price and the high of today. A break above that, you can, if you're looking for a day trading opportunity this afternoon, you can take profit here. But ideally, what we're going to do is build a position longer term. Right now, if you look at longer term positions, let me take you through one last strategy here. Many different ways we can do this. Ideally, on a long-term position, what's best is trading the stock or leap options, long-term options, long-term call options on this play. Now, if we can trade the stock on this or the long-term call option, right, another way we can develop an income is by selling short-term options against it to bring the income in. Now, the point of selling the short-term options against it is twofold. We want to generate another form of income. It's like buying a home and an investment property and you're leaving it vacant, right? Just to buy it for appreciation of the value of the property. We don't do that. What do? We buy the home, we rent it out, right? Why? To get another form of income. We should do exact same thing with stocks holding longer term. Buy the stock and develop another form of income. So we can do that by selling short-term option contracts against it. That'll bring in the short-term income. Now, the first point of this is what we want to do is sell the short-term call option against it, bring in income, and that income that we generate, we want to use to buy a long-term put option against the stock that we own. So, for example, if you're around for this trade and you got in this at $51, right, and you can sell in short-term option contracts against this, and you bring in income in, now you can take that income that you've generated, and you can come in here and you can buy a put option at 57. So now you've got the guaranteed right to be able to sell the stock at $57, even if it goes bankrupt, but you didn't have to pay for the insurance because you're going to be using the premium from the option contracts to buy that insurance on the stock. Now you've got a risk-free transaction, guaranteed risk-free transaction that you can get the appreciation of the stock, moving to the up stock going up, and continue to sell short-term options against it to bring in another form of income. Now, if you do this on stocks that have dividends, you can then generate the dividend play as well. So real quick, last one. You can tell I love this stuff. If you look at Exxon as an example, Exxon is in a great position to do this on long-term plays. Look, we're in demand right now. You can buy Exxon for $37. This has an 8% dividend on it. So you can buy the stock for $37. Right? We need the stock to move up, right? So I can put the insurance on it. But we can buy Exxon at say $37, where we're currently trading, right? Then sell the short-term option against it, and I'd be selling it above this little supply level here, right, on a weekly basis. Bring that income, do that several times, and then I can buy insurance on the stock. Now I've got a risk-free guaranteed trade that I can't lose any money on, right? And I can generate weekly income if I choose, or monthly income by selling the weekly or monthly option contracts on it. Plus I get an 8% dividend, and it's gonna pay me 87 cents a share every 3 months. So now what we got is the stock could appreciate, which is highly likely over the years for an oil play, right? I got an 8% dividend, so I've got basically an 8% return on the stock as long as the dividend stays the same. And I can get either weekly or monthly income on the stock, and it's insured. This is how a retirement portfolio must be built. You've got to have your long-term wealth guaranteed. Right? So these are strategies that from the trader standpoint, as we teach, you must know if you're going to have a retirement portfolio. And from our standpoint, you must be self-directing your retirement portfolios, right, to have this type of control of your financial future. Dale Sogger, Trader Boys, it's been great to have you guys with us. Right? Love the comments, love the questions. You guys rock. And we'll be doing this on a pretty regular basis as we build out the Trader Boys and build out the trading room. And we'll have short snippets of this in the future coming live from the trading room so everyone can get a little taste of this. So absolutely awesome to have you guys on board. Love you guys, and we'll see you guys soon.